Yo, my people, I welcome all of you once again to my channel. If this is your first time watching my video, consider subscribing because on this channel, I always deliver my best. Yes, in my previous webinar, I touched on demand and supply levels, and I mentioned various lows and highs that we have. Examples are yearly highs and lows, quarterly highs and lows, monthly highs and lows, weekly highs and lows, daily highs and lows, and sessions highs and lows. Yes, and I again talked about demand zone structure, and this very video I'm going to continue with my tutorial, and I'm going to talk about supply zone structure. Yes, what causes price to oscillate up and down is the unfilled orders or imbalances being caused by institutions. And demand zones are created when there is more sell orders at a given price. And these levels of unfilled orders act as magnets for price because price has to come back to fill those levels before their transactions could be completed. Yes, so price always moves in the market to fill orders. And don't forget, as institutions trade, they always leave their footprints in the market in the form of liquidity because they can't fill their orders at once. And this liquidity means money or buy and sell orders which are located at key levels of interest. And inside this liquidity is where we have our entries. That's where institutions place their orders. And price always tends at these liquidity levels. Yes. So these liquidity levels are located at different levels. We have major levels and minor levels. High probability turning points are the major zones, which are major demand and supply zones. Therefore, in this video, I'm going to touch on supply zone structure. Yeah, so talking about supply zone structure, there are three concepts we are going to look at. The first one has to do with something called rally. Rally means an uptrend or buy pressure, or we can also say swing high. And the second concept is base, which means supply level. It also means consolidation, range, or equilibrium level. The third concept we are going to consider is drop, which means downtrend or sell pressure. Yes, so on this note, I'm going to illustrate the two types of supply zone structures we have. The first supply zone structure involves only two concepts, which are drop and base. So let me illustrate it for you to see how it looks like. So the first supply zone structure, which is A here, looks like this. Assuming the line represents our candlesticks, and then the upper left side of the trend is what drop. This is the overall trend. It is what swing low or downtrend. So the starting point is our drop, which means swing low or sell pressure. So as we come to this level, then we have our base, which means supply or consolidation range equilibrium level. After that, then we have another drop to the downside. So technically, we describe this trend as drop, base, drop. Yes, and don't forget, drop means down move, base means supply, then drop means or down move. So on this note, I'll take you to the charts and then help you locate this particular supply zone structure. Yes, looking at this particular market, starting from the premium level, this is our drop. So looking at the trend, this is a typical example of supply zone structure. This side of the market, which is our drop, means sell pressure. After that, we have our base, which means supply level or consolidation or equilibrium level. After that, then price made another drop formation. Yeah, so let's look at more case study. We again have another one here. This is our drop formation, supply level, then drop. Another drop here, supply level, then drop. Yeah, we also have a typical case study here. This momentum swing low is our drop formation. And then we have our supply level here. After that, we have another drop formation. So drop, base, drop. Now let's get to the second example of supply zone structure. You, my people, this is my BA representing the second type of supply zone structure. And then starting from this angle, this is our rally, which means an up move or buy pressure. Then after that, we have our base here representing supply level or equilibrium zone. Then the right side here, we have another drop here, meaning down move, swing low or sell pressure. Yeah, so technically we call this type of supply zone structure as rally base drop. Now I'm going to take you to the charts and then help you to locate the second type of supply zone structure. Yeah, this is one case study of rally base drop formation. Looking at this momentum swing high is our rally. Then the top here represent our supply level. Then we have our drop formation. So rally base drop. Let's look for more case study. They are common in the market. Yeah, another typical example here. We have our rally formation. Then the top side is our base, then drop movement. The rally base drop. Rally formation was formed here. The top is our base, which representing supply level. After that, then we have our swing low, which is our drop. So it happens over and over. Price action is all about demand and supply zone structures. Yes, because price always oscillates and tends at a major demand and supply levels. Those are the key levels where liquidities are located. Yes, another typical case study, rally, base, drop. So my people, that's how it is. Always remember that trading at price levels where big banks have their unfilled orders is the lowest risk high reward strategy, and these price levels act as magnet for price. So definitely in future price will come back to fill these unfilled levels or unfilled orders, because the purpose of the market is to match buyers to sellers and sellers to buyers. And don't forget, drop based rally and rally based drop market strategies are found at the extremes of the demand and supply curve, and rally based rally and drop based drop market strategies are found in the middle of up and down trends respectively. Yeah, so looking at this formation, supply is located at the middle of the trend, and then the second structure is where supply is located at the major price level. Yeah, so on this note, I would like to sign out here. See you in my next video. I love you all. Bye bye.